it used to be 99%, 99.5, but over the, you can say, on various counts, 2010 was a watershed year because of a lot of suicides being committed, and
Right.
that sort of disrupted the industry. Having said that, a lot of microfinance institutions have now converted themselves into small finance banks, and that is really a very good story which is emerging.
So how much is the loan book size of the NBFC that you're talking
It
about?
is about 300 crores.
Yeah, it's a good one. Very good
Yes,
size.
yes,
300 crore in 10 years.
yes.
And it's all based on bank funding for the.
Yeah, about eight times is the leverage.
8 times.
Yeah,
8 times is the leverage. Okay. I
correct.
think RBI permits up to 8 or.
Yeah, 6 times is the thing, and 3 times you could go with tier two capital.
Okay. And it has not gone to public issue.
No, not it.
Not yet. And the annual expansion is also happening. Good. Great.
Slowly it is happening because see, as you progress, it is more important for you to raise equity.
That's right.
And in the last couple of years, that segment has not really been interesting for equity investors.
Is there any refinancing available from SIDBI? Also
Yeah,
for the
SIDBI is one of the SIDBI is definitely one of the institutions.
for
Apart from
refinancing?
SIDBI, there are the loans can be securitized.
That's right.
That is a very good mechanism.
To
Okay.
the banks, to other
Yes,
banks, financing.
yes. Banks, or you could even it is a saleable security. Okay, once you bundle it, there is a originator, there is a guarantor, and that can be bundled and sold to various. I think it is also listed. It can also get listed.
Right.
Yeah.
Dr. Kumar, excuse me to come in, and we will be beginning in next 2 minutes at 3:05.
Yes.
Okay.
Yeah, please carry on, Zubair, whenever you want to start.
Sure.
We are ready.
Definitely. Okay.
So very nice, Mr. Ramakrishnan.
Thank you.
To have you very wide experience in banking and finance, and as you say, you have the entrepreneurial, backing also background, and very diverse experience. We would
Thank
like
you.
to hear you about the various changes and announcements which have happened over
Absolutely.
the last 3-4 months, especially during COVID time. And of course, besides this 3-4 months,
Yeah.
an overall ecosystem for the MSME sector, how is it helping, and what are the gaps? What do you
Yeah,
think?
there's a lot of cleaning up which is happening. Okay, and but it is also important that the MSMEs are aware.
Right.
That is one challenge which we all keep facing. While there are a lot of this was incidentally there earlier also, but now things are much more pronounced and easier. But the awareness is yet to really gather steam.
Right.
So I think we should be starting with the session today.
Yeah,
Yes.
please. Thank you.
Okay. So just let me put on things. At the outset, I welcome all the participants and our eminent speakers for today on the subject of the discussion, which is alternative financial instruments for SMEs. And this webinar is being hosted by Power to SME jointly with Wadhwani Foundation. And I seriously hope that the discussions and deliberations at today's session will help the participants to address their concerns and issues pertaining to the financial options they have for running their businesses. And before we start the discussion today, I have a few requests to be made to all the participants. You all are requested to kindly be on mute throughout the entire duration of the session, and kindly switch off your webcams and videos, and try not to present this screen. And today we have with us a highly seasoned panel of subject experts, including Dr. H.P. Kumar, who is the former CMD NSIC and Director of External Affairs, Power to SME. And before I hand over the session to Dr. Kumar, I would like to give a brief introduction of the organizers, which are Power to SME and Wadhwani Foundation. So Power to SME, it was established in year 2012 by the founder and CEO R. Narayan. It is 9-year-old company. It is a very innovative business model of demand aggregation through a digital ecosystem, and it eliminates intermediaries on the chain side. And Power to SME, we have uh, brought verticals. Power.com, our portal, it aggregates demands and it procured from big manufacturers and supplies SMEs, thus transferring the price benefit. Our portal financeme.com, it connects SMEs with the financial partners and for working capital requirements. And our portal smeshops.com is India's biggest B2B e-marketplace for industrial goods. Both SMEs and corporates can buy, sell, procure industrial goods in bulk quantities over SME shops. Our NBFC BIS Funds is a very young, innovative, contemporary company providing easy credit solutions for raw material procurement.
Sorry for interrupting, Zumair. Can you please present your screen again?
Okay.
I would request all the other participants to please not present their screens and to kindly mute themselves.
Is it visible now?
Yes.
Okay. Thank you. So these are the key product categories that Power to SME deal in. We deal in polymers, paints, yarn, chemical additives, and many more products. Key industrial segments that we cater to includes auto components, electronics, agricultural tools, engineering, and you may find on the screen other industrial segments. In response to the market demand during the COVID crisis, our portal SME shops came up with the entire range of COVID-19 essential products, including thermometers, masks, PPE kits, and many more. And both the SMEs and the corporate can place orders and sell of these COVID products on SME shops in bulk quantities. We are the funded companies. Some of the most reputed venture funds in the country have invested in us. Inventors, Kalari, Excel, Nandan Nilekani is one of our investors. We are a World Bank funded company through its financial arm, International Finance Corporation. These are the few awards and accolades that we have won since our inception. Uh, uh, mention Worth mentioning is Forbes India Leadership Award that we won under Outstanding Startup category. And this is our social media presence. So you may get in touch with us, through any of these mediums. Our co-partner for this webinar is Vadvani Foundation. They have a flagship program by the name Vadvani Advantage, whereby they connect SMEs through various consultant, business coaches, investors, and corporate clientele. They take you through the journey of around 3 months, and they empower you to sustain the business disturbances. These are the broad areas whereby Vadvani Advantage program will assist you. And this is all. And before I end my word here, I request all the participants to kindly subscribe to our daily news, SME Khabar, which is a one-stop for all the relevant SME news under one point. And the subscription link is available on the chat box. And also, I encourage friends to kindly submit their feedback. The feedback link is also available in the chat box. And if you have any queries to be asked to our eminent speakers, you are requested to submit your queries in the chat box, and these questions will be taken to the speakers during the Q&A session. So with these words, I hand over session to Dr. Kumar. Dr. Kumar, you may please take it forward.
Thank you, Mr. Zubair. Thanks for the introduction. Very good afternoon to all the participants and the distinguished member, the guest speaker, Mr. Ramakrishnan Venkateswaran, who is the president of Venkateswaran Consulting. who is the president of Venture Bean Consulting. Sorry. In fact, the issue that we are going to discuss is very important today. Alternative financial instruments for the MSMEs. Well, financing has been a very important issue ever since I got associated with the MSME sector, must be even before also. But I have been witnessing this discussion for the last close to 40 years because MSME sector has always been talking about the non-availability, inadequate availability, difficulty in availability of terms and finance from the various sources, from banks, from financial institutions, from NBFCs, from government, from foreign sources. You know, there are various sources by way of various instruments that the MSMEs should be able to access finance, but the availability of finance has been a concern. The terms and conditions, the ecosystem has been a problem. Well, various committees were established. Mr. Venkatraman would endorse later. I have been, seeing committees like starting from Tandon Committee in late 70s, followed by Chore Committee, and then Marathe Committee, and then Nayak Committee in 90s, and then followed by Mr. S.P. Gupta Committee, and various other committees, S.L. Kapoor Committee, and Mr. Chakravarti Committee, Punjab National Bank, then Prime Minister's Task Force, and lately one-man commission by Mr. Prabhat Kumar. All these committees have given scores of recommendations for improving the flow of funding to the MSMEs, not only credit, but then other way of financing MSMEs through equity support, through foreign funding, through ECB, through venture funding. A lot of mechanism has been proposed, but the shortage continues. The difficulty in availability of credit still continues. So we can discuss today as to which are the sources, which are the alternative sources of availability of finance for the MSME sector, how easy it is for the MSMEs to raise finances from alternative sources, what are the major terms, what are the constraints, how should MSMEs be preparing themselves to approach for seeking such kind of funding from alternative sources. So these are the issues that we are going to discuss today. Let me put the context in place. In fact, bank finance, as we know, the government has taken various initiatives. Right from beginning, from the industrial policy resolution, which was passed as back as in 1950s, the government was very clear that MSME sector has to be supported from all sides, and finance being one of the very important factors, inputs, in fact, to help the MSMEs. It was not MSME at that time; it was tiny village and cottage industries and small scale industries. So the objective was to create a environment whereby the industrial development could be dispersed across the country, and the small tiny enterprises could generate localized employment in villages, small towns, countrywide. I think this vision, which was perceived to be in 50s when industrial policy was framed, holds good even today. That we need to create employment in rural areas, we need to create employment through cottage and village industries, we need to create employment and create small businesses through self-help groups in the downtown areas, local areas. Particularly, you have seen what has happened over the last 3-4 months when the migrant workers went back to their homes and villages, which also gave rise to this demand again that we should be dispersing our industrial activities to the villages, to the small towns where these migrant workers or the workforce where there is a lot of unemployed workforce could get the employment at the local level. So while this policy needs to be strengthened by the government through various measures, coming back to the availability of resources, availability of finances, which is of course a key input for development of any industrial activity and particularly the MSMEs. I would say that banks have played a key role. The policy of the government, which is a unique policy of classifying MSME credit into priority sector category, since 70s I have been looking at, and allocating a certain percentage for the MSME sector as part of the priority sector, has done a lot of good work for the MSMEs in availability of funding. Other policies of the government, like providing collateral-free credit by way of giving credit guarantee up to rupees 2 crore, then interest subvention scheme of the government, then advising banks to open specialized branches for helping MSMEs, small scale industry, which is called small scale industry branches, SSI branches. Then setting up entrepreneurial training centers across the country, setting up state specific enterprise building centers. The objective is basically to build a network and ecosystem of creating employment in the one side and also funding on the other side through banks. It has been going on for quite some time. But as I said, that demand is tremendous. There is a shortage of availability as far as total availability is concerned. As per SIDBI report and the IFC report, if you see International Finance Corporation, there is a shortage of around 16 lakh crore. There is a gap in the availability of credit alone from the banks. Now, 16 lakh crore, how will it come? We have to open up various sources, not only banks, but then other sources like raising equity from the markets, from the stock exchanges. One option of raising substantial amount of funds is through external commercial borrowings. Now, ECBs have been talked about over the last decade, and a lot of relaxations have been granted by the government of India. But then ECB has not been accessed substantially or has not been accessible to the MSMEs because of various constraints, because of limitations and terms and conditions applied on availability of ECB for the MSME sector. That issue, I think, is very important to discuss today, because by and large people have the notion and perception. I think Mr. Ramakrishna would also be able to help decode this myth that foreign funding is available at 2-3%, and India we are borrowing at 10, 11, 12, 13% from the banks. So this is, I understand the differences. I think Mr. Ramakrishna would be able to, because he's working in this space for financial consultancies to the MSME sector and also industry per se. Now, these are some of the issues which we need to discuss and address and deliberate and help the MSMEs to understand which are the better options, which are the better instruments, and which are the easy way of accessing financial assistance from various sources. With these opening remarks, I think I would like to invite Mr. Ramakrishna. Mr. Ramakrishna Venkateswaran, who is the president of Venture Bean Consulting, has a lot of experience, more than I think 3 decades of experience.
Absolutely.
In various areas, banking and audit and private sector and financial services industry, strategic consulting, and has core experience in lending, risk management, financial control, fundraising, equity, merger acquisitions, and also focusing on business strategy and management consulting. He has mentioned that he has entrepreneurial interests also in financial services and fintech. So, Mr. Ramakrishna,
Yes, sir.
You have heard, in fact, my opening observations and the questions that I have raised.
Yeah.
There is a huge gap. Please carry on.
Yeah. So, while there are quite a lot of things which we could discuss, but looking into the constraints of time, I would like to first of all restrict myself towards what is happening in the current environment. Okay, and would initially start focusing on why why we should look at alternate sources, and then how the MSMEs could sort of access to these alternate sources. See, irrespective of the situation, our general advice to the MSMEs, or for that matter, any of the smaller companies, startups, or small and medium enterprises, is to manage, in order to manage funds during crisis, it is important for us to, first of all, prioritize survival. Because unless and until there is an entity, there is a going concern, there is nothing else which is important. So in course of trying to address this prioritizing survival, we typically advise them to look at essentials are addressed and non-essentials are completely removed or deferred. And during the course of doing this, it is extremely important for the companies to try and understand where they stand with respect to whatever they have planned earlier versus what is happening. So in order to address that, we recommend them to rewrite their business plans, monitor their existing fund flow through a proven mechanism of zero-based budgeting. And typically we expect them to do this on a month-on-month basis. And one critical thing which we looked at as we progress during this crisis is every company always keeps talking about their unique selling proposition. We all understand that that's the critical part with respect to differentiation, so on and so forth. Having said that, we want most of the companies to replace this USP with another acronym, LSP, which is typically liquidity in order to enable that survival or continuity, then solvency in order to enhance trust, and then profitability, typically the unit economics, to instill investor confidence. And why are we looking at these things? Liquidity is extremely important in this situation. And how do you typically try to enhance liquidity? We have recommended some of our clients to look at their debtors, irrespective of who the debtor is, whether it is small, large, or even the government for that matter. We wanted our customers to try and, first of all, rate these debtors in order to understand who are the ones whom they should continue to deal, or who are the ones they should try and reach out to in order to enhance their liquidity position. Coming back to the alternate source of financing, one of the critical alternate source of financing is the receivables financing mechanisms which are available. So by rating your debtors, we typically instill the confidence in whosoever is the financier that the company is in a position to understand what is the status of their debtor, whether it is going to come or not, and basis which they reach out to the alternate means of financing. So within the receivables financing section, we have multiple methods of financing. One of them is the invoice financing. Even before a product is reached out, there's an invoice which is raised to the end consumer. This is now getting financed by multiple entities. And when I say multiple entities, there are lots of fintech enterprises which have started in this company, and GST being a significant support in this whole mechanism has enabled lots of small and medium enterprises to access funds through this invoice discounting mechanism. The technology also has helped to understand the credibility of each of these invoices as well as the companies who are raising their invoices. The other critical thing which has emerged during the course of this change in the environment is there are a lot of very large companies which have come forward and started anchoring these MSME programs, wherein the fintechs are enabling anchors to reach out to their suppliers and bring them on board to these type of platforms and help them access more and more funds through this mechanism, which is completely a seamless and transparent mechanism. So what we typically recommend our MSMEs is to reach out to these platforms. One of them is Treads, which is being promoted by Axis Bank and various other banks. Register themselves as part of these platforms and enable invoice discounting to happen through these mechanisms. The other mechanisms which are also available are merchant advances which are being provided. This is typically helping those companies which have a retail trade and which are in a position to gather receivables through credit card mechanisms, and assuming that this business has a runway of XYZ, the technology is enabling them to understand what sort of business this particular company can do, and they preempt those things and provide advances to these companies right at the beginning. The mechanism is to actually securitize these credit card receivables and enable themselves to be completely risk-free, while also providing risk-free financing to the small and medium enterprises. There are other mechanisms which are inventory financing, which is also something which has emerged during the last half a decade or so. And most of these are all related to those companies which are very well managed in terms of their governance, compliance, so on and so forth. So typically we recommend our clients to ensure that their governance and compliance is all on the top draw. Now, coming back to one of the mentions, things which you had mentioned about ECB. ECB is something which typically we would sort of not recommend the MSMEs to consider as one of their mechanisms to reach out for accessing funds. But having said that, because the government now has enhanced the limit of MSME from say earlier about 10 crores to about now 250 crores, that is also something which can be looked at by the larger MSMEs, which typically should be anywhere between 100 to 250 crores. Any companies which are below that threshold should ideally look at funding mechanisms more related to those which are asset backed, which typically are for capital expenditure, which they typically import. They could look at buyer's credit, which is again provided by banks and financial institutions, which actually defers their liability, but enables them that initial cash flow to ensure that they are making their purchase efficient, and then thereafter repay the loans. So some of these things were already there. It was there earlier also, but now these are things which are getting much more pronounced.
So no, I think you have given a first-hand information, first-hand knowledge about various instruments.
Yes.
We will keep talking about this. There are so many issues which have come up, in fact, during your deliberations.
Absolutely.
I would like to mention some of them. Very rightly mentioned that in the alternative sources of financing, alternative instruments of financing, the receivables financing holds a very, very important place.
Absolutely.
Because majority of the companies and SMEs particularly face difficulty in realizing their receivables and book debts, and face a lot of liquidity constraints.
Correct.
And shortage of working capital. I think that may be one reason for a large number of MSMEs to become sick or turn into NPAs because they are not able to service their, liabilities to the banks.
Yeah,
So
you have hit the nail on the right place, because the issue is with even with very large uh, rated corporates. Every corporate has now started looking at ensuring liquidity. So whatever they have done is sort of pushed their creditors to a secondary requirement, and are actually keeping themselves cash positive in order to address potential opportunities which are expected to come after this pandemic. Once the pandemic starts reducing, obviously there could be significant economic activity. Most of the corporates, especially in the infrastructure development side, they're all cash rich. They are waiting for the projects now to come up. Hence, what they typically do is to defer their payments with respect to their small and medium suppliers. That is not actually helping the overall eco space. The reason being, most of the suppliers, I could say about 70% of the suppliers, are all small and medium enterprises. And if the whole supply chain gets disrupted, the economy is not going to definitely be benefited through these actions. That is the reason why this alternate source of funding is extremely important. Although the government has put in the system that anything over 45 days has to be reported, it is not being stringently followed. And typically, we have seen in many of the large corporates, they have now started shunning those MSME companies who are already registered in the MSME portal, not to bid for their work. So some of these negative things have to be addressed while addressing the cash flows as well.
absolutely.
Yeah.
I think coming back to alternative sources of financing,
Yeah.
let me turn to now equity financing.
Yes, sir.
That is a very important source, and the government has also recognized of late, and they have announced a fund of funds of 50,000 crore, whereby the government will contribute 10,000 crore as a mother fund, and then 40,000 crore will be leveraged from other organizations who
Absolutely.
are interested to participate in that fund, and that is how this fund will be made available for participating in equity, providing equity support to the MSMEs up to the extent of 15% of their capital, and they will be encouraged to list on the stock exchanges.
Yes.
Now,
Yes.
my point is, because they said that it will be applicable for high-rated MSMEs.
Correct.
Now, when it comes to high rating of the MSMEs, we have observed over a period of last almost 20, close to 15 years,
Yes.
because we started a rating scheme in 2005 in NSIC.
Yeah.
And we found that it is very few MSMEs which come at the top of the rating, say, AAA and AA, or because of the limitations in their operations and in their working capital, in their, managements, in their plans. You are a strategic, advisor and consultant. You better understand as to which are the limitations that the small enterprises, MSMEs face.
Yes.
In view of this, the getting high rating on a rating score becomes a little difficult.
Extremely difficult.
So in this case, what happens is, if your rating is not very high, when you go to listing on the stock exchanges, your real net worth, your real potential, your real, inherent strengths
It's not evident.
are not evident.
Yes.
And that is how it reduces the valuation of your company.
Correct.
It reduces the premiums which you could have commanded otherwise if you had a very high rating.
Absolutely.
So, first thing is, how do we resolve this dilemma for the MSMEs? Because on the one side, they need funding. Equity financing is an open route available to them. They can really bring out the real worth of their company, create value for their own as well as their partner shareholders. And government is also ready to help. The government has also given the fund of funds, 50,000 crore. But on the other hand, this constraint of high rating and the issues which they have been facing comes in their way. So how do we resolve this dilemma? Or
So
or in
let us,
spite of this, they have to go about.
yeah, so let us look at who should ideally try to raise equity through the listing mechanism.
Yes.
Whether they are rated or not is a secondary question. That's the next thing which we will come to. What should be the threshold? See, the critical part in this whole piece is once you are listed, the expectation of you to comply with the, the law is multiplied by, say, 10x. Whatever you were doing earlier, typically most of the small and medium enterprises are proprietary driven, although they would be private limited company. There is a single point of decision making, there's a single point of contact, or whosoever the person would be doing every activity, whether it is from marketing, sales, finance, handling resources, human resources, relationships, so on and so forth, is all with one or two at the max. That itself is a major constraint. Typically, when you look at getting listed, it is very important for you to understand that you are now not going to be proprietor driven, it is going to be public driven. There is someone else who is going to monitor your performance. There's someone else who is going to question you. There's someone who could trash your stock out there and create havoc in your valuation, so on and so forth. It is very important for the companies to understand what should be their threshold in terms of turnover or the size. Anything above 25 crore is something which we could suggest you could consider getting listed. But having said that, the cost of compliance and the time taken for compliance is going to be significantly different from what you were earlier. You're expected to, in fact, get your books audited by June. You cannot expect the deferment typically which happens in various counts, and it just keeps dragging. It doesn't happen that way. It has to end at some point in time. So that is something which companies should understand. Why are they going for listing? So that is something which is very, very critical. There is no question of trying to raise money through the listing mechanism if there is distress, even for a small percentage of your expectation. There has to be a significant upside basis which someone is going to come and invest. And that responsibility lies with the promoters and management. The other important thing which people should definitely look at is, yes, there are all things are fine. Yet my intention is fine. I would want to comply. I would want to definitely give significant upside to the investors, as well as I have a very good product and the market is also conducive. In that sense, they should then start looking at whether they are capable in terms of getting rated and rated at the AAA or AA, so on and so forth. How do they address that? Extremely important to reconsider three types of restructuring. One, they have to understand that their operations has to be top draw. If required, those operations have to be restructured in terms of fixed expenses versus variable expenses. As far as possible, try to reduce your fixed expenses, because that is something which is going to be very critical in terms of providing significant value to your investors. And most of the investors would want to understand your efficiency, and hence as you reduce your fixed expenses, your efficiencies typically increase. The other thing which investors would want to understand is your management. Unfortunately, what happens is, especially in these times, it is not easy for small and medium enterprises to get significant management bandwidth. And that is precisely why they start to sort of restrict themselves and reserve themselves only to the proprietary form of management. So in order to go for listing, definitely there has to be a significant management bandwidth. Things should be similar, or if not better, to large corporates. It is also important for you to understand that this management bandwidth can come in the form of consulting or in the form of advisors If your board is strong, there is intention is very, very clear that this company is in a good shape to look at upside, or for that matter growing significantly beyond their expectation. So investors typically look at board, they look at the management team, they look at the operational dynamics, so on and so forth. There is one more aspect which typically we recommend our companies is on the balance sheet restructuring. When you look at balance sheet restructuring, the core assets should be the ones which are present as much as possible, because end of the day, asset efficiency is looked at from the core asset point of view. Non-core assets, as much as possible, should be removed either through divestitures or through, say, there could be some of them who could in fact exit them through demergers. In fact, one of our clients had gone for a demerger because they had significant land and building which was actually not useful to them. So they hived off that particular unit and removed the land and building from the thing and started focusing more on the operation side, thus completely giving them the leeway to focus on core business activity rather than on property management, so on and so forth.
Okay, Mr. Ramakrishna, let me intervene here. In fact, what you are mentioning is very right, that the MSMEs, the larger ones, which are of course having achieved a good amount of success, which can expect good valuations, whose management, have, done a good job by way of professionally managing the enterprises, showing good growth. They need not worry. They can only need the consultancy. They can only need the help of some merchant bankers and consultant like you.
Absolutely.
So that they can bring out their best things, in fact, and the performance which they have achieved. Absolutely. So that they can get the real valuation and the real pricing of their, equity issue, and they do not lose out on because of the simple rating, which probably they may not be able to get without doing a homework and without, getting expert advice from.
Precisely.
That is what is needed. But at the same time, I would say that equity raising, listing on the SME exchanges is a great option for the
very great opportunity.
Great opportunity, and they should go for it more and more, because in the SME sector, I have found that it's hardly 500 companies or so have listed over the last 7-8 years, 6-7 years since the stock exchanges have established. And out of millions and millions of SMEs which are existing, and at least thousands of them could be eligible for raising equity from the stock exchanges. I don't know why are they shying from going to the stock exchanges, because that is the funding available without much cost. Of course, there is a little cost expenditure involved in issuing the share capital.
Absolutely.
That, of course, is initial expenditure, which is a one-time expenditure. And later on, you have to have very less reporting. In fact, for the SMEs, the compliances also have been substantially reduced by the government. So I would exhort, in fact, the good SMEs, those who feel confident, to in fact take this route for raising alternative sources of funding.
Absolutely.
ECB you mentioned. I would say that ECB also is a very good route for the bigger ones. In fact, as you also indicated,
100, because the importance of managing forex is extremely critical over here.
Yes, they have to have the foreign covers for the exchanges and all the exchange cover. And of course, the cost has to be comparatively worked out, because you have to add the exchange cover cost also in the interest rate that you are, working out. So it is not that 2-3%; it could be 8, 9, 10%.
Very much, very true, very true. In fact, the rates which are currently quoted for MSME financing through this package is extremely competitive. I have never seen such rates, except for a few years from 2005 to 2007, we had these type of rates prevailing in the market. But at 7.25%, with a moratorium of 12 months for this package, is actually a very good thing which the government has provided.
Right.
And that is one of the key things which the MSME should use in order to turn around and show a better track record, so that in future they are not stifled.
Yeah, coming to TREDS, receivables financing that you mentioned.
Yeah.
So receivables financing also helps the SMEs, in fact, to raise funding, alternative sources of funding. But the point is that TREDS is only 3 platforms, first of all, approved by RBI all over the country.
Absolutely.
The number of companies which have registered on TREDS for as a buyers are very limited.
Yeah.
I think there is a government directive that all those companies whose turnover is more than 500 crore must register themselves on the TREDS platform, but it has not been implemented.
Yes, it has not happened.
It doesn't happen. So that availability of that option for the SMEs is very limited, because when they supply to some buyers which are not listed on the or registered on the TREDS platform, they have no option of going for this kind of financing. But you mentioned invoice financing, which is a very interesting.
Non-banking finance companies,
you
in
come
the
on
last 3 or 4 months have come up with significant number of
invoice financing.
Yes. So, in fact, incidentally, one of the companies I'm also advising on their board, they are a platform which works very closely with large corporates and provides multi-tier supplier chain financing. So when I say multi-tier, it is not the first supplier to not only the first supplier to the large corporate, the supplier, and the supplier. So 4 tiers can be addressed through this whole mechanism. So assuming that one of the suppliers, say 250 crore turnover, even the guy at 1 crore or 2 crore turnover can come within this chain and be provided at a rate which is typically given only to the large corporate. So everything is dependent on the large corporate's ability to pay on time.
Right.
So this is a very good mechanism which has come up. There are multiple such providers.
It's a very innovative way, invoice financing by the NBFCs. I can understand NBFCs maybe having little higher, I think, rates probably as compared to banks, but
not necessarily. See what is happening, sir. Let me rephrase this. The platforms work in the form of a marketplace, similar to TREDS. Whatever is happening with the TREDS. Okay, there could be bidding which can happen, or there are very dedicated financiers who are participating in these platforms. For example, ICICI Bank, Axis Bank, IndusInd Bank, HDFC, Kotak, Sundaram Finance, Cholamandalam Finance. All these people are participating in this. The very critical thing over here is everyone is now looking at a mix of assets rather than focusing on their core activities. Say, for example, commercial vehicle financing, or for that matter, asset financing. Now they have sort of broad-based their offerings, which also include this invoice discounting.
Right. And for invoice discounting, these NBFCs, of course, NBFCs are already registered and they are licensed by RBI. But other than NBFCs, also I understand there are fintech companies which are not even NBFCs. They are also operating and providing platforms which are basically, like platforms for others to come and discount invoices as well as.
Absolutely, yes, precisely. That is what I'm trying to mention.
That is what you're mentioning.
Yeah, and more importantly, sir, the thing is the rates which are otherwise available to the large corporate. So assume that there is an L&T or a Tata Projects which is the end beneficiary of the invoice. The suppliers to Tata Projects or L&T will be given the same rate as an L&T or Tata Projects. So there is no differentiation for any of these segments. Okay, so that is a very good thing which has actually come up, but unfortunately the penetration is not significant because of their awareness, the ability to create more awareness within the thing. So that is where we recommend both the industry and the financiers to have a proper partnership, something like Power to SME is a very good platform which can actually turn into a fintech platform, providing all these services under one umbrella.
The Power to SME has the NBFC license.
Yes.
That is how they are already registered with RBI and providing these financial services,
Fantastic.
credit facility to the MSMEs for procurement of raw material as well as for other purposes.
Very good.
Now shifting to another instrument that you mentioned is cash flow discounting.
Yes, sir.
And I would say either you call it as a cash flow discounting or like receivables
Financing.
expected receivables financing,
Yes.
or you can say credit card receivables financing, which
Correct.
you mentioned here.
Yeah.
Now, how far this business is going to grow in India? Because I can understand these credit card financing, credit card receivables financing, or cash flow financing majorly is being done by NBFCs,
Yes.
not by banks. Because
Not by banks.
banks have their own models of inventory financing, they have book debt financing, and they have other asset financing models, conventional models which the banks have.
Correct.
But these new instruments which are coming up like credit card receivables financing, cash flow discounting,
Yes.
invoice discounting, these are majorly being taken up by the NBFCs.
Yes.
One particular concern, which of course has been expressed, and I get the feedback from having been associated with the MSME sector, is the cost. Now, between banks and NBFCs, there is a cost difference.
Absolutely.
How do we bring down the cost of NBFCs? Because last 3 months, there have been windows opened by RBI through SIDBI for refinancing the NBFCs. Now, these refinancing support is available at 7-8%. So why this 7-8% is taken to 14, 15, 16, 18, 24%?
Yes. The cost of operations of non-banking finance companies is significantly higher, number one. Their ability to raise funds is also significantly higher. The cost of funds is also significantly higher. The problem, my expectation of these type of alternate means of financing growing significantly is over the next, say, 3 to 5 years period. Prior to this, what was actually happening is everyone was focusing on the asset-backed lending mechanism. Irrespective of however you look at it, everyone wanted the cushion of an asset being there in order to fund. They were not really looking at cash flow as the real asset. While we all know that cash flow is the real asset, okay, while we keep telling cash is king, cash flow is actually monarch, okay. If it keeps coming, then it is actually, it's like a samrat, okay. So bankers also have to understand this mechanism very clearly, that cash flow is the one which is tangible. Even if there is an asset, we are actually, it is not entirely risk covered, because the asset values can fall. Incidentally, now if you really go out and sell all your mortgages, it is going to be mayhem over there. You will not be able to even make, say, 30-40% of whatever you have lent. But having said that, unless and until the banks and the NBFC start looking at cash flow as the key for lending, it is going to be extremely difficult, because not everyone is going to continuously keep providing you collateral.
Right.
There has to be a stop somewhere, okay. And that essentially requires the MSME also to come out transparent. Why were these instruments not being used earlier? Because of accommodation bills. There were invoices being just like that raised without any thing, whether they are actually true or not. The transparency was lacking. But after GST, all these things have sort of reduced, because GST means there is a working capital which you have to ensure that at least 18% in terms of in the services side, or maybe about 28% in the product side, has to be there for you to make a authentic invoice. Otherwise, all these things were just like that happening. So the trust factor was extremely low. With this GST coming forward, even the e-way bill is something which is very much evident of what is actually happening. These instruments have now sort of enhanced the transparency levels, and this will progress over a period. And I'm expecting this to be a critical phase for us, that cash flow financing will emerge as the significant thing over the next 3 to 5 years.
Right. So coming back to our other sources of funding also, like conventional sources.
Yeah.
Now, particularly during the COVID time, the SMEs have been facing a lot of difficulties and their liquidity has been very adversely affected.
Yes.
And they needed working capital, immediate working capital support from the banking system, and government came out with a very good scheme of emergency credit line of 3 lakh crore.
Correct.
Now, the guidelines and eligibility criteria has been established very well, and a lot of people have taken advantage. And I don't think there is any problem with regard to the communication between banks and the eligible SMEs, those who have been made eligible, those
Correct.
those who had outstanding of 25 crore as
Yes.
on 29th February of 2020, with turnover up to rupees 100 crore,
Yeah.
they have been made, and standard account. They
Correct.
have been made eligible, in fact, to draw 20% of their existing outstanding from the banks as emergency credit line. And by and large, I have come to know that all those who are eligible are able
Have
to,
been provided. Yes.
if they want. If some
Yes.
of them do not even want,
Did not even take. Yeah.
so they don't take. But those who needed, the banks have come forward. It has been both sides, in fact, have contacted each other,
Yeah.
and they've sorted out with completion of some kind of documentation for additional facilities. The
Yes.
problem is not, in fact, for those who have been made eligible. The problem is those who were not eligible under that emergency credit line. And either they did not have any banking facilities, any credit facilities availed from banks earlier as on 29th February because they didn't need it,
Correct.
or those who have outstanding of more than 25 crore.
Yes.
While they are good companies, standard accounts, they have been doing extremely well with the banks. They have never defaulted in terms of repayment of principal, interest, or anything. But their outstanding has been more than 25 crore. Or their turnover has been more than 100 crore. Now, since turnover limit also has been increased to 250 crore for
Yes.
MSME. So between 100 and 250 crore, there are a lot of SMEs who have, who could avail this facility, even though their outstanding is within 25.
Correct.
So those companies which have outstanding of more than 25 crore, not eligible. Those companies which have turnover of 100, between 100 and 250 crore, not eligible. How do we, help them?
See, one of the critical constraints over here is time. It is not that help cannot come. Any attempt to be made in a proper way should require a runway of about 3 to 4 months. Why do we require these things? Because in order to ensure that everything is proper and to approach the right sources. So what could be the right sources? There are venture debt companies which are prevalent in the country. For all those who are doing well, these venture debt companies give significant thing, but honestly, this comes in the form of a significant cost, which could range anywhere between 18 to 24%. Having said that, that would be a good cushion for the MSMEs who are at that category. The other thing which also can emerge is mezzanine debt, the one which you look at from converting that the debt into equity over a period of time. Okay, so but all these instruments require time to ensure that we prepare the road path in a proper and concentrated manner in order to get this. Immediate short term, I am sorry to say that there are not many instruments which are available apart from whatever we have already spoken about.
Let us come to the other scheme which government has announced as part of this stimulus package, that is distressed MSME fund.
Yes.
Distressed MSME fund of 20,000 crore which the government has announced is meant for those MSMEs which are already distressed or NPS.
Yes.
Either they are SMA 2, that is those who have already defaulted to the banks, or they have already been declared NPS.
Correct.
So the point is how this funding is being made available to the company. Because as per the guidelines, the banks will make available personal loans to the promoters of these companies.
Yes. They
Personal
will have to
loans,
bring it back again as equity.
in the name of directors
Yes.
or partners or proprietor, personal loans.
Correct.
And these people, these promoters have to invest that loan as equity back into the company
Yes.
in order to improve their debt equity ratio and to improve their capital base.
Correct.
Maybe that funding could be utilized, in fact, to repay the earlier outstanding dues also, or for restructuring of the company as far as bank relationship is concerned.
Absolutely.
Now tell me one thing. Why not this restructuring? Why not this, route of financing the individuals and then individuals investing in company could be replaced by way of straight away restructuring of the debts of the companies? Because
Yes.
ultimately what is happening?
That is a very important thing which you have raised.
Yes.
Why should the government attempt this, or rather Reserve Bank should attempt this?
Yeah.
The end of the day, all this moratorium and enhanced lending mechanisms is also likely to put the financial sector into distress. Whereas restructuring is not going to put them into distress. The reason being, cash flow is not there. When we are saying 20% of the MSME loans, that is about 3 lakh crore, the cash flow is not going to come now, because that has a moratorium of 12 months. There is not going to be principal repayment, or for that matter interest payment during that period. You can only do a deferred payment basis. It will start after 12 months. So this is going to constrain the banks in terms of cash flow. Number two, when such a scenario happens, the ability of the banks to look at risks in a positive manner is getting diminished.
Yes.
Although banks keep saying that their levels of moratorium has started reducing, it is see, end of the day, somewhere, some point in time, this stress is only going to emanate in the form of an NPA. Say, if not by September, it is going to happen by December. The banks definitely should bite the bullet once and ensure that restructuring is happening across board, maybe for an extended period. Instead of say 3 years, make it 5 years or even 7 years. Let us now start looking at future cash flows as the mechanism to take risks.
No, one good thing about this scheme is that the repayment period has been fixed at 10 years.
Yes, yeah, you are mentioning that.
It's 7 years moratorium. So that is a very attractive proposition.
But that is for an NPA. Unless and until that the banks are confident that this NPA is going to turn around, it may not be very useful, or the thing which they would be happy to take about.
No, as I mentioned, that restructuring, direct restructuring, as it used to be, as you may remember that RBI had announced restructuring schemes early 2000, in fact, and a lot of restructuring took place to avoid NPAs classification.
Yes.
Similar restructuring schemes could be opened up.
Yes.
Some of this restructuring has been opened up, which is valid up to 31st December 2020 as per RBI. But it is very restricted, in fact, for those NPA accounts of MSMEs which became NPAs only on such and such date, and prior to that probably they were standard.
Absolutely.
Not for all NPA accounts, or not for all, because ultimately what happens is there are many constraints which MSMEs have been facing.
Yes, sir.
Non-realization of their receivables in time, in
Yes.
45 days, has been one of the biggest constraints.
Yes.
A lot of money is due from the government organizations, government departments. Government admitted that, and probably they have mentioned also that all these dues should be cleared in 45 days, even government dues also. So this has been one of the major factors that the MSME have been facing constraints of their liquidity and of their financial position, and that is how it has made them turn into NPAs. So keeping in view these constraints and the future of MSMEs at stake, and the unemployment problem, the need for continuing with the employment so that these units do not close down, the restructuring would have been the best answer. And even now also,
it's a vicious circle. So there are two things which this government has to address. One is the restructuring, and the other is the classification.
right.
If they address one time, classification has to be deferred, maybe 12 months down the line, because everyone is looking at a fresh start 12 months further. Okay, so when that is the scenario, I feel we should definitely look at biting the bullet and looking at a fresh start, and this will actually help the financial system. Otherwise, there is going to be pain for the financial system as well.
Absolutely.
Because recapitalization of banks is going to be a very painful journey. At least out of the banks, we may expect at least 50% of them to be coming up for recapitalization.
Right.
Yeah.
So I think a very exhaustive discussion on various kinds of instruments,
Yeah.
various kinds of sources. Very interesting. In fact, I am sure that must have been useful to all the MSMEs who are participants today. But let me come back to you with another important question.
Yes, sir.
That how do the MSMEs present their accounts, present their company, and make the presentation before the banks so that they become successful in raising finances from the banks? You are expert inputs because you are a strategic advisor for fundraising.
Yeah. So the first and foremost thing I would request SMEs. Okay, here it's an honest request that please turn digital. Everything should be now looked at from a digital point of view. Your invoice raising should henceforth be digital, and these have a lot of benefits in the sense that there are lots of companies. For example, you would have heard about Zoho, you would have heard about Hilo. These are all some of those companies which have come out with fantastic invoice raising mechanisms, which enable a lot of insights to come out from just inputting information from whatever your regular operations are. This will typically help banks to take very calculated risk. They will try to the balance sheet becomes much more transparent for them, and everything you do is actually a mirror for the banker. When that is the situation, things become much more open, and the banker starts taking trusting the MSME in much more stronger manner. The more important aspects are definitely the next 12 months. The situation is going to be a little bit tough for all of us, whether it is MSME or for that matter the corporates as well. So during this course, we typically look at a 24-month runway, saying that all my costs after having removed the non-essentials should be addressed by the available cash flow. Whether it is available or not is the first question one has to raise and try to address that. If it is still not possible, then try cutting down the costs. What are all those costs which you can definitely take a call on and removing them? This could include trying to address salaries. It is very important for the MSME promoters to communicate with people and say that I am going to save your job, but yet there is an equity which you also have to put forth, which is taking a lower salary from whatever you were having earlier. Okay. Similarly, the promoters themselves also have to reduce their take-home significantly. These things would sort of enable the companies to come to a situation where they can address their cash flow for the next 24 months. If that is addressed, then the companies can start looking at what are all the options for them to grow.
Right.
The other thing which we have been trying to recommend to some of our clients is also to look at consolidation. If there is an opportunity to merge with like-minded people, that is something which we would recommend. And with the size being much more than what it was earlier, there's a lot of other possibilities which you can typically look at, not only from raising funds, but also presenting yourself in a much more stronger manner. So some of these things have been the recommendations which we used to give to our clients.
Yes. No. I think what you have mentioned is very well appreciated. Only thing I was wanting to provoke you as to which are the areas where MSMEs can make their projections, make their presentations before the banks, because everybody feels that they are not being taken very seriously by the banks and there is difficulty in getting the credit facilities from the banks. So how do they prepare themselves? How do they prepare their papers and how do they prepare their projections, which attracts the bankers, in fact, to come forward.
So that is precisely why this 24-month thing was coming up. So when we look at like I informed earlier also, we look at the LSP, that is liquidity, solvency, and profitability. So when we approach liquidity per se, that is for us, for the promoter himself, he has to ensure that there is ample liquidity in order to continue. The solvency is something which has to be projected to the banker. That is where the critical part of addressing whatever is there comes, and also understanding his existing customers, his existing debtors, his ability to turn around the inventory, so on and so forth, is very, very critical for them to understand the solvency.
No, I agree. In fact, the banker is on the other side. The banker is also sitting on the public funds, so they are interested to safeguard their interests.
Absolutely.
They would be surely interested in, solvency of your business, liquidity of your, maintaining liquidity in your business, security, of course, and return on their investment. So
and more importantly, the banker wants early warning signals.
Absolutely.
If there is an opportunity, it is better presented to them in a positive way. And if at all there is some sort of a negative thing which is coming up, it is important for the communication to happen properly, rather than being away from them.
Right. So I think we have had a very exhaustive discussion on alternative sources of financing and the current situation. What is the way forward? How do MSMEs are able to get access to these kind of additional resources? So now I think we have certain questions, if we can address them from the audience. Where
we have
Saudamini,
a lot of questions engaging today.
Yeah, Saudamini, we are not able to hear you fully.
Can you repeat, Saudamini?
The first question is from Mr. Chaitanya Agarwal. Is listing a good way to raise capital for an MSME? Is the direct or indirect cost of listing an MSME company worth listing?
Your voice is still cracking, but what I could understand is whether the listing is a good way for raising equity from the SME exchange. That is the question.
Yeah.
So and the second part, of course, was not clear.
Yes.
Let me address it.
So is the direct or indirect cost of listing an MSME company worth listing?
Yes. So let me address this. In fact, equity raising by way of listing on the SME exchange is the best way to raise cheaper funding and to improve your valuations. In fact, your actual worth will come up only when you are able to list your securities, list your shareholding. That is one thing. So, and you can get additional funding. You can leverage that resources for raising maybe 2 times, 3 times more from the banking system and as a loan. So your debt equity ratio also will be better if you are able to raise the equity. Now coming to the direct and indirect cost. Direct and indirect cost, you can assume that the total cost of raising equity is in the range of 8 to 10%. Now, it includes direct and indirect both. There is nothing like indirect, it's all direct cost, which you have to pay to the merchant bankers as well as to the brokers, and also expenditure on, your publicity, marketing,
market maker,
and your, dealing with various paperwork, communication, transport, all these expenditure, which is an overhead basically for running around and completing all your documentation and other things. So that is the expenditure, but this is one time. So if you are able to raise maybe 10 crore, 20 crore by way of spending maybe 10%, it's only once. Otherwise, if you are not able to raise even, from banks also, it's only annual cost 10%, 12%, 10%, 12%. By way of equity, it's only one time. And of course, the actual expenditure is one time, but then equity also has to be serviced. Like the loans, equity is not free. The shareholders who have given you money, who have invested, they would expect return annually. So you should be sure that your company is on the growth path and you will be able to service the equity by way of paying them dividends. So that balancing has to be done, that leveraging has to be assessed, and merchant banker or a consultant can surely help you in arriving at how much equity, how much debt, what is the good combination looking at your future financial projections.
And to add to Kumar sir, the ability to raise equity is just one part. The moment you raise the equity, there is a further leverage which can happen, which will actually help in the company growing much more than what it has expected to grow. So
Perfect.
definitely equity going for listing and raising equity is something which is a very positive thing. More importantly, transparency is something which is required, and we always recommend our companies to come out of their erstwhile behaviors and change for the future.
Sure. So how many questions we have so that we can structure our answers accordingly. If there are too many questions, then we'll make a very small answer. Otherwise, we'll explain.
Yes, there are multiple questions. We have 5
No
questions,
issue.
but each
We'll be brief
question has
but
its
to the
own
point
subpart
so that we
to
can
it.
cover all the questions. Please.
Yeah. Right. So the next question is from Mr. Milind Inamdar. He says, as per the Government of India, Department of Micro, Small and Medium Enterprises, there are notifications for distressed MSME units for credit funding. But the bankers are not issuing the bankers are not helping till they get circulars from their respective banks for NPA and SMA2
No, I
accounts.
think this
How
is
can you help
correct
us?
observation. The question is correct. The Government of India, Ministry of MSME has already issued the guidelines. They have already issued the guarantee provision
Scheme.
also, because this is to be covered under Credit Guarantee Fund Trust of the MSEs. All this work has already been done. RBI has also issued a clarification on this as back as just 5 days back. Now it is the banks who have to issue the directions and the schemes to their respective branches. I'm sure it will happen within a week or so. Some of them have already started issuing. So just have little more wait. So Damini?
Right, sir. Mr. Amit Gadia has a couple of questions. He said banks in MSME sector are not going beyond the 1:2 ratio. Even this ratio of rupees 2 by bank against promoters rupees 1 investment is achieved in 10 years of non-default history and lots of visits. Even if companies like us engaged in even for companies like us engaged in government sector contracts, the government sector clientele should enable the banks to at least give funds in 1:4 ratio, that is rupees 1 investment of promoter to be matched by rupees 4 of bank funding in simple and sure bank sanction and disbursement letter. The above will increase the ease of doing business. Is
Mr.
there
Ramakrishnan.
financing option for receivable from government discoms in the form of retention money and hold money against the approved bills? These take anywhere between 3 to 4 years to realize, and the banks do not fund for these receivables.
So, first of all, let us look at the question in two parts. One, banks are comfortable giving 1:4 in terms whenever there is a capital expenditure being considered. So, if the company goes for an asset purchase, which is required for the business, then they would expect the promoter to put in anywhere between 15 to 20% and fund the rest anywhere between 80 to 85%. On the other side, the other mechanism of funding is the working capital financing. Working capital financing typically looks at your working capital gap before even looking at funding. So it is nothing to do with what the equity is, but more related to your conduct of business, whether it is in terms of inventory turnaround, whether it is in terms of debtors days, or whether in terms of whether you have utilized your creditors to the maximum. So all these three aspects of the working capital cycle is something which is considered by the banker. And generally, banks would want to have a 25% margin before for funding the working capital gap. So one cannot expect the banks also to take a business risk. The banks are willing to take their funding risk, which is adequately covered by various means, but the business risk obviously has to be taken by the funder. Having said that, banks have now started reducing their requirement of margins with respect to working capital. And obviously, like we have also informed about various other alternative means, it is important for the SMEs also to reach to these sources in order to get funded.
So, Damini?
So the next question is from Mr. VK Kuchal. He says, if a company account has been declared NPA in 2013 and OTS was done in 2017, what are the ways to raise funds by it post-recovery, and all the clients are big renowned customers? Because of the NPA tag, no bank is agreeing to provide the additional credit facilities. What is the course of action available for such companies?
Well, I am afraid since they were declared NPA in 2017, probably they may not be covered. This company may not be covered under the distressed MSME fund assistance scheme also, that recently that we discussed, because there also probably there is a guideline or the entry criteria that those MSMEs which were standard prior to 2018. They were standard prior to 2018. There is some date which I am not sure. They only will be covered under this scheme. So since they were declared NPA in 2017, they have only to make request to the banks for any kind of settlement or closure of the account. Otherwise, I don't think there is any bank assistance or RBI sponsored or RBI advised any assistance scheme which can really help them in restructuring or clearing the dues.
Yeah, one more to add over here. As far as this particular client is concerned, I suppose the OTS has also already been done and the recovery has started happening. But the company has to present the recovery in a proper manner, saying that they have brought in equity, they have been able to garner more clients, and there is a established cash flow which is coming. If that is the case, then there are alternate means of getting financed, including but not limited to venture debt. And if at all they have some of their things also include intangibles, it is better that they project those intangibles in a positive manner and reach out to the alternate modes of financing. As far as bank financing is concerned, it will be too early to say. Maybe say another 2 years or so, they may be able to raise bank financing.
Yes, so Damini?
So the last question is from Mr. Suresh Narayan. While the turnover limit for MSME is enhanced to rupees 250 crores, the collateral fee loan has a low limit of 100 crores. This has to be corrected. Also, this facility has a cap of 1 crore, which is really half-hearted and needs to be reviewed. Is there any financing option for receivable from government in the form of IT or GST refund? These take anywhere between 3 to 4 years to realize, and the banks do not fund for these receivables.
Right. No, I think the first point that he mentioned is 100 crore turnover to 250 crore. We have already taken up, in fact, this issue with the Ministry of Finance recently, because this 100 crore eligibility was fixed when the proposed turnover of MSMEs was 100 crore in the initial announcement. And based on that, this 100 crore eligibility was fixed in the emergency credit line. So later on, since the definition has been increased from 100 crore to 250 crore, we have requested the government to include all those MSMEs up to 250 crore and make them eligible for drawing this emergency credit line. Regarding the second issue, that it takes 3 to 4 years or even very longer, in fact more than, much longer, 2 years, 3 years, 1 year, for various receivables to be realized from the government and government organizations, and banks do not fund. Yes, this is correct, because banks are, at the most they are able to cover up to 180 days. Normally, otherwise they do it only for 90 days.
90 days.
And if you have a special kind of a business, this is considered to be an exceptional way of accepting. You can at the most go for 180 days, but beyond that, banks do not accept overdues receivables, because they feel that overdues beyond 180 days are virtually at risk of being recovered. Yes. And they may not be able to recover, and that is how they can't lend the money. So there is no way that it can be covered in the receivable. The only way is, in fact, putting pressure on the government and departments to clear their overdues. There are various mechanisms created by the government through Facilitation Council and other reporting system, MSME Samadhan, which has been started by the Ministry of MSME. So all these mechanism is that the government should be able to clear their overdues, and it does not affect the liquidity or the financial position of the MSMEs, does not turn them into NPAs. Any other questions, Sudhamini?
No, sir, that's all for today. I would like to thank Mr. Venkateshwaran for attending our webinar today.
Thank you.
And it's been a pleasure. It's been a highly insightful session for the audience and even for us as a team. And I'm sure that many of our participants will benefit from all the knowledge that you have given. Thank you, Dr. Kumar, again for presiding as usual over our webinars with such ease and excellence. And over to you, sir.
Thank you, Sudhamini. I think we have had a very exhaustive coverage of various issues today,
Absolutely.
and it is very. I mean, it's very different occasions that we are able to have so much of expertise available from our guest speakers also, as
Thank
Mr.
you.
Ramakrishna
Thank you so
put
much.
through light today on various things. He, in fact, he suggested the various innovative instruments like invoice financing, cash flow financing, credit card receivables financing. Trades, of course, have been in the discussions at various levels earlier. People know something about trades, but these are new instruments which you suggested, and various other sources of financing like ECB and NBFCs, of course, providing various new forms of financing, fintech financing, platforms being made available for anybody to go for bidding of these, receivables. These are all new instruments which are available, and of course, nothing like banks, financing from banks, because that is the most easily understood and very convenient. It's like a running account and very trustworthy, as people feel. The feeling about bank financing is very trustworthy. So bank finance cannot be replaced, of course, by others, but then those who do not have the facility of bank finance or limited by not being able to access, bank financing. So naturally, there have to be other sources of financing available. Equity financing, of course, is an excellent opportunity. I think I would exhort again to all the eligible MSMEs who are SMEs, of course, not the micro ones. Those who can really go for raising equity from the SME exchanges, it will benefit them a lot, and it will really put their company at 4 times, 5 times, 10 times at the higher pedestal as far
Absolutely.
as valuations and prospects are concerned. So thank you very much. Thank you, Mr. Ramakrishnan, in fact, for your insightful, you know, um, things that you
My
informed.
pleasure. My pleasure. This has been a very good forum for me also to express myself.
Yeah, it was very interesting. In fact, I'm sure the audience also would have benefited quite a lot. We have been able to address their questions. In case still they have any questions, they can write to Power to SME,
Yeah.
and we will be able to address their queries if at all. Uh, I mean, if there are any. So let me also thank now to the Power to SME's team and Vadvani Foundation, those the organizations which have put these programs in place, and Ms. Sudha Sareen, who is the Senior Vice President of the Power to SME, who is the brain behind organizing these events, and my colleagues Zumair and Sodamini, both of you doing extremely well, and putting these uh, programs together for providing a lot of intellectual inputs and knowledge and information and guidance to the interested MSMEs who join and join us for these programs. So thank you very much. Thanks, everybody. Over to you, Zumair.
I would request all the participants to look at the feedback form in the chat bot, where we're interested in knowing more about all the participants and how we can improve our webinars so that we can serve your needs better. So please give us some feedback on the form, and also kindly subscribe to Power to SME's daily newsletter, SME Khabar, which brings you comprehensive SME news, articles, blogs, infographics, everything that you need to know to run your business efficiently. Thank you very much for attending this webinar and being with us here this afternoon.
Thank you, Sodamini. Thank you.
Thank you all. Thank you so much.